So, like I said, in this video, I'm just going to kind of go over the basics with you and teach you some of the things I've learned over the years and what strategies I like to focus on and why and how they all kind of work together. So, who am I? First, like I said, my name is Jason Pinkerton and I'm retired Air Force, and I got into real estate investing while still in the military. 2009 when we bought our first home, and then in 2011 when we moved, we had to figure out what to do with it. So we started off as accidental landlords, my wife and I, and we did that for a while, not really getting too heavy into real estate. And then in 2016, when I had to move from North Carolina, I had to figure out what to do with my house. I had a very large house payment on it because I had a 15-year mortgage. So I built up quite a bit of equity, but I couldn't rent it because my mortgage was way higher than the rent. And I didn't want to sell it because we had so much equity. I kind of wanted to hang on to the asset for a while, but I couldn't figure out what to do with it. So I started doing a whole bunch of research into real estate investing and really just became obsessed with it. And then after studying it for several months, I went full all in. And what I mean by that is, one, I wrote out a business plan, all this sorts of stuff, created my mission statement and all that, and then bought 3 properties in the first month. One of them being a duplex. So I didn't really know what I was doing so well as I thought, and quickly found out that I didn't know everything. So I failed pretty miserably. I was spending a lot of nights at my rehab projects, was in a ridiculous amount of debt and not the good debt, and was spending tons of our hard-earned money and my retirement savings trying to work on these projects, and was just in way over my head. So I sought knowledge and mentorship and coaching through several different programs and paid a ton of money. So I'm already in a ton of debt with all these rehab projects, and I decided I'm going to go into more debt. And so I bought a whole bunch of training programs. Some of them you've probably heard of, and they were actually really good. They taught me quite a bit, and kind of gave me a lot of the knowledge. I worked my tail off over the next couple of years, trying out several different strategies and figuring out what I wanted to do, going to all kinds of conferences and events and buying more properties and selling more, and really just trying out different things to figure out what I wanted to do. But eventually I leaned on my own experiences and my mentorship to guide me as to really what I wanted to focus on and what really aligned with what I wanted to do. Because of that, I was able to retire from the military and provide financial security to my family and be able to spend a lot more time with them, which was my idea of success. So I wasn't trying to make millions upon millions of dollars and become like Robert Kiyosaki, at least not right now. I just wanted to be able to provide some good financial security for my family and be able to spend a lot more time with them. So in that way, I am very successful and continue to grow my business at a pace that makes sense for me. So what are the 4 legs of the real estate table? Just kind of going to jump right in here. There's basically 4 really key ways you can make money in real estate, anything in real estate. And I know some of you may get super nitpicky about this, but I'm just trying to categorize it into like the 4 legs of the real estate table, okay? One is carrying paper or financing, and basically this has to do with anything like the banks or owner financing or maybe lending, where you are lending money to an investor or on a property or something like that, or different ways of doing creative finance, which is a whole nother subject, as well as doing notes. So anything in that kind of category, you're financing it. You have the money, so therefore you already have a lot of wealth, most likely, and you have to have specialized knowledge on that. You can't just open up your own bank or just start financing property without following some of the particular guidelines. So while it's great if you can do that, chances are you're not starting off that way, right? The other way is to own a property. Seems to make perfect sense, right? So this is your landlords. Maybe bought some investment homes. Sometimes, like I said, I had a previous home. I instead of selling it, I just rented it out, and that was more because I didn't think I had an option. So I owed basically what the house was worth, so we kind of had to rent it. So I thought, and I kind of threw in REITs in there, which is real estate investment trust. You're not really owning a property per se. You're basically putting in money into a giant pool of money to own property. So you're kind of, I would almost classify that more into the carrying paper or financing but I just kind of threw it in there. The other issue with this is that it requires money. You can't really buy a property without putting some money into the deal. There are some creative strategies you could do, but for the most part, in order to own a property, you have to put in some money, right? And this can be very frustrating as landlords if you don't know what you're doing and you don't have the knowledge of how to be a landlord. A lot of landlords I know are very burnt out, or they just accept that's how it is. Another method is controlling property. Some examples are syndication, sandwich lease options, or lease options in general. Wholesaling kind of counts as controlling property, even through an Airbnb management. It's kind of a unique one that's coming up nowadays, but that is technically controlling a property depending on how you do it. And this doesn't have quite as many downsides. It actually can be done easily without money and some training. It's not like you can just jump in and start doing this. You do need training, but the cool part about it is a lot of times you don't really need much money to do this. You can do it with money and scale it much faster, but you don't have to have it. And then the other, and this is kind of lumps in everything else that has to do with real estate, and this has not really so much to do with real estate investing, but just anything real estate. So your realtors, your attorneys, maybe home inspectors, mortgage brokers, contractors, rehabbers, anybody that like basically has anything to do with homes and the transaction of real estate. Generally, this requires years of training and licenses. You can't just go be an attorney just because you want to. You have to go to school for several years, and you're going to be in a lot of college debt. Same thing with realtors. You have to pass your tests and everything. Any of those are going to require some sort of testing or licensing. And so I'm going to focus mostly on number 3 and a little bit on number 2. But the first one and the fourth one, if you're in those, great. But for real estate investing, I'm going to focus on number 3 and a little bit on number 2. So what are the investment strategies out there? Well, they kind of break down into 2 main categories. You first have your acquisition strategies, and this is sometimes what you hear about, like foreclosures or short sales. And this is how you are acquiring a deal. Towards the bottom there, you could just do a plain MLS purchase. You could just go buy a property. Like there's nothing that stops you from doing that. But it probably is not a deal. But this is how you acquire a property or acquire a deal or acquire the control of that property. Okay, so this is only a sample. There's many other ways out there that you can find deals, but this is how you are taking control of a property. The exit strategy is more of how you actually collect money on the deal. So there's a saying out there that you make money in real estate when you buy, and that's true. If you buy a deal, then when you go to sell that deal or exit that deal somehow, that is where you make your money. If you buy what's not a deal, basically buy a house for $200,000 and it's worth $200,000, it's really not a deal. You're just buying it at face value, and you'd have to wait several years in order to make any money on that. And chances are you're really not going to make much money on it anyways, to be truthful. So your exit strategies are how you actually collect money on the property. You can do this through wholesaling it or assigning the contract. That's one way that's taught a lot out there. Fix and flip, you can buy a property cheap or even at face value and fix it up nice and improve the value of it, rehab it basically, and then sell it at a higher price. This is another way that a lot of TV shows are spun off of. Flip this house and all those sorts of things you see on HGTV and all that. Buy and hold is another one that a lot of people got into. Over the years, they've bought a house, hold on to it for a while, rent it out, fix it up, improve it over the years, but they just keep renting it out. And that's another one out there, as well as a lease option. That's one of the ones I like to focus on, but that is where you are leasing it with the option to buy to someone else. So it's kind of a combination of buy and hold, and also you could include some assigning the contract or selling the property at full value. So how do you make money in real estate investing? Well, one way is to work. That's what I started off doing. I was doing fix and flips, landlording. I didn't really do any land development, but that's one way. Wholesaling as well. You can broker deals, drive for dollars. And that's just a little sample there, but you're working somehow on the property, on the deals constantly. Anyone who's done wholesaling knows it's a very active business. It makes pretty good money, but you have to constantly be doing it. It is not passive at all. The other way is to have knowledge, to have the specialized knowledge on the different strategies and know how to make them work between each other. And a lot of it is knowing the who, not the how. And what I mean by that is knowing who to call, who to go to get things done, and not how to do it. Just because you know how to swing a hammer doesn't mean you should be going there and working on all your properties all the time, unless you really love doing that. But you can't really scale a business too well if you're constantly the one doing everything. You know how to control the deals and not necessarily working in the deals. Doesn't mean you're completely hands off, but you're not constantly over there swinging a hammer. Creating the deals from nothing. When you really know what you're doing, you will know how to create deals even when it seems like there's not a deal there. Deals that others have passed on because they don't know what to do, you know how to make it into a deal. And leveraging expertise, not labor. So another way to think of it is, these are the tools. You're over there working on the deals, and knowledge is being the foreman. The guy over there who's dressed up a little bit, who's not swinging the hammer, who's not, uh, doing the hard labor all the time. Guess which one gets paid more? It's the guy who knows how to put together the deals. So what are some typical real estate investment strategies that you probably see out there? And chances are you've come across some or heard about some of them, right? Wholesale is a big one that's taught out there. Some of the pros with that is that it's quick cash. You can make money in wholesale, once you got your kind of systems going within a week, up to 30 days. Basically, you get it under contract and you sell that contract to someone else. And by it, I mean a property. It doesn't require much money to start. It does require some marketing dollars, most likely, but you don't really have to put any money into a deal in order to make it work. It doesn't require extensive real estate investing knowledge, but you do need to kind of know what you're doing, or it's not going to make you any money. If you are getting the house under contract for more than what is a wholesale deal, if you're getting it for say 90 cents on the dollar, meaning it's worth $100,000 and you agree to pay 90,000, that's not a great deal. No one's really going to pay you for that, right? Especially if you're going to charge them any money and bump it up from 90 to say $93,000. It's not really a deal. Some of the cons is that the market is flooded with wholesalers. Because it's so easy to get started with wholesaling, the market's flooded with them. And there's some giant big wholesalers out there that have the most and the best marketing. WeBuyUglyHouses.com, and they got the giant billboards and all that. They got tons of marketing, and there's so many We Buy Houses signs out there. So the market's flooded with them. And sellers know how to shop wholesalers. They can just, go Google sell my house, and, someone's got search engine optimization or SEO, and that's who's going to pop up first. It's not going to be you, Joe Wholesaler, just starting out. And you have the same offer as everyone else. Everyone's offering lowball offers. So if everyone is doing that, you're no different from anyone else. And it's generally whoever has the most and best marketing wins. Whoever that seller sees the most and thinks of, that's who they're going to call. And like I said, it's only your only offer is a lowball offer. So most people are going to say no. You're basically a one-trick pony, and you're like, hey, take it or leave it, right? The other strategy out there is fix and flip. Like I said, you see this on HGTV all the time. And some of the pros of that is there are some big profits if done right. I mean, those TV shows, sort of tell the truth. There are some giant profits that can be made, and it can be outsourced to contractors, so you do not have to be the one swinging the hammer, which is nice. It helps the community because it improves the value of that home and improves, if you took an ugly house that everyone kind of hated on the block and you made it pretty, you help the community out. Some of the cons is that the real estate market is kind of heavy with rehabbers, and probably always will be, to be honest, because there's always going to be dated houses that need to be fixed up. It does require a lot of your own capital or someone else's capital, OPM, other people's money. So you do have to have a lot of money, either from someone else or your own. And it is very easy to get the numbers wrong on this, I promise you. One of my first flips, I got the numbers kind of wrong. I trusted the wholesaler who sent me the deal, and yeah, it didn't go so well. I lost a lot of money. Like it says, you can lose tens of thousands of dollars, or even more. It takes about 3 to 6 months on average right now to turn a profit. Even in a hot market, you got to acquire it. You're going to have to put in at least 30 days of work. And those are the really, really easy deals that only take about 30 days. Most of them take about 90 days is average to go in there and do everything if it's a good deal. And then it's got to sit for anywhere from a month to close, up to 3 months or more. Mine sat for several months, even in a hot market, because I couldn't really lower the price because I had lost so much money already. And there's some very heavy holding costs. So if you're doing hard money lending or any sort of lending from, like, say your parents or your uncle or something, uh, anyone who's lending you money to do this, like, they're going to probably charge you something per month to do this. And it's easy to overlook additional costs, and there's also a lot of unforeseen repairs. So even though you go in there, you get a contract, he says, "Oh, it's only going to be 30,000 to flip this." Oh, we didn't know that there was a giant hole in the roof, or something, or there's termites, or the foundation is shifting. That's going to be an additional $20,000 or whatever. There's a lot of unforeseen repairs that can happen. And a lot of times, if you don't have a good contractor, they'll tell you one number to get started just to get a foot in the door, and then up the price later when they start finding, quote unquote, finding things they didn't see supposedly before. The next one is buy and hold. And that's kind of the easiest way to get started. Some of the pros are it generates long-term wealth. So this is one of the greatest ways to generate long-term wealth, but it's long-term. It's not quick. It has great tax advantages, especially now past the 2018 tax bill, to where it generates a lot of really good advantages for real estate investors. And it doesn't require a ton of real estate knowledge. You really just got to be able to buy the house. And then that's it, and just have someone else manage it. Some of the cons are it's very easy to lose money over time. If you didn't buy a deal and you just bought a property at face value, like you probably won't make money over time unless you know how to run the numbers correctly. Uh, it can be very draining to a landlord. If you've ever been a landlord, and I have and still am, it is very draining if you don't have good property management. And sometimes you don't know if you have good property management until after the fact. And that can be very draining to get those phone calls of things always going wrong or not receiving the rent, and you still got to make the mortgage payment and all that. If you don't buy right, you're always going to lose for many years. And profits are slow and long term, but there are profits. So I'm not trying to make any of these sound like they're completely bad, but there are profits to be made. But these are some of the cons. It's not going to make you rich overnight unless you already have a whole bunch of money to go buy a bunch of houses, or know what you're doing and have someone else invest in you. And the tenants tend to not take care of high profit, such as Section 8 houses. So those are where your mortgage payment is $300 a month, but you're able to charge $900 a month. So you're making high profit, but the tenants are not going to be taking care of those. It's not to say that they're bad or anything like that, but Section 8, they're probably not going to be keeping the garden all pretty and keeping it fixed up. They're just living there. Profits are slim in the nicer houses. So, if you have a nice house in a nice area, your mortgage payment's going to be higher, and your rent is going to be just a little bit above the mortgage payment most times. So, you're generating long-term appreciation, but not much cash flow. So as you can see, there's quite a few cons, and obviously there are some more pros and cons you could add to this, but it has a lot more cons if you just do them, singular by themselves. So is there a better way? Well, one of the ways I love to focus on is lease options. So lease options, what are they? Why should I care? It is a lease with the option to purchase, just like the name implies. It's a right to purchase. They're also known as rent to own. You have the legal right to purchase the house. The owner cannot deny you. You could sue them if they try to deny you for some reason. And generally, you already have at a specific price. You do not have the obligation to buy. You can choose to buy. You have the option. You don't have to. A sandwich lease option is similar, except for it's you, the investor, is in the middle. And what's the best part of the sandwich? Well, it's the meat. It's the cheese in the middle. So you are the meat in the middle, so to speak, and you're the one who's getting the most profit out of it, but it still is a very, very win-win-win deal. It is a lease option with the seller. You have a lease option with them, so you don't have to put any of your own money down. And then you have a lease option with the buyer, so you're in between the deal. The investor makes a lot of the money and doesn't have to put any money out of their own pocket. Sometimes you may have to put a little bit down, but you are collecting that upfront from a tenant buyer. And I'll get in a little bit more into that down the road. It's very flexible, which is why I like it so much. It's kind of like clay or Play-Doh. You can mold it however you want. What is a wholesale lease option? Basically, if you take the lease option and you wholesale it, you assign the contract to someone else. So you're assigning that to someone else for a fee. Some of the advantages of that is that you still get the upfront capital. You don't get the cash flow, however, and you don't get the large capital at the end at the close. but there's also zero risk in doing that because you're no longer in the deal. So it's like kind of like wholesale and lease options, kind of the best of both worlds. I know some people that do that and they do very well, but you don't get the cash flow. So there's that. So some of the pros of that is it creates medium-term wealth. Generally, you're not hanging on to these for many, many years like you might with buy and hold, but you still hang on to them for a couple years, 2 to 5 on average. You can go longer. Can't really go much shorter than 2 years. They do give you some very good upfront capital, generally about 45% of the home price. So anywhere from $7,000 to 30, 40, $50,000 if you're out in like California and New York. Then you'll get some very good capital up front. You get monthly cash flow if you're hanging on to them, if you're doing a sandwich, and you get a large capital payout at the end. It combines the best out of all the investment strategies, in my opinion, and there's no out-of-pocket capital required. Even if you put down an option fee, you're collecting that from someone else, so you're never out of pocket on this. You kind of get all the reward without all the risk. And any risk there is passed to the buyers and sellers. And they're okay with that. So what do I mean by that is, say, like a lot of times in my deals, I have it where any repairs $500 and below, the buyer pays for, or tenant buyer pays for, and any repairs or expenses above $500, the seller pays for. And a lot of times I'll have them put a home warranty on there so that it covers any repairs. So they're both taking on a little bit of risk, but it's split. And it's fair to all of them. And they're okay with that because they're getting a lot out of the deal. It creates a total win-win-win strategy. When I present this to people, they love it once I've explained it to them. Some of the cons are it does require specialized knowledge. So it's not like you can just get in this, with a 1-hour training or even in this video and just go do it. You do need to kind of know what you're doing. And really understand it and be able to explain it to sellers and buyers. And that's usually the part some people have issues with. But because of that, it means that also not a lot of people are doing it. And it can take some investors a little bit longer to get started because of fear, like all strategies out there. But once they get over that fear, they really can kick it into high gear and start doing some great things. As you can see, there's a lot more pros than cons. Obviously, I'm a little bit biased on this, but I'm giving you the truth here and how I've seen it work over the years. So what am I saying no to? All right. Am I saying that lease options are the only way? No. Am I saying that these other strategies are ineffective? No. Or am I saying that these other strategies don't work? No, that's not what I'm saying at all. I'm not saying that any of the other strategies are bad, okay? In fact, if you give me, any of these 3 houses, on the left, you got the ugly house. It looks like about to fall apart. Top right, you got just kind of your average house, nice home, looks like a nice neighborhood. And then down below, you got, a really nice house, kind of a little McMansion there. Really pretty house, really pretty area. Give me any of these houses, and I can make the deal work. On the flip side of that, who lives in the houses? People. And what do people have? People have problems, all right? They got bills, they got debts, they got foreclosures, they got stress, financial stress. So whether I'm dealing with, a decrepit house over there that's all run down, or I'm dealing with someone's problem with financial problems, it's 2 sides of the same coin, and I'm able to help them. However, if all you know is wholesale and you go to that house on the left there that's all run down and you're going to fix and flip it or sell it to a fix and flipper, you're a one-trick pony. It is either deal or no deal. There's no in between. Either you get the house at a cheap price to sell it to a rehabber, or a rehabber gets it at a cheap price and to turn a profit. It's deal or no deal. There's no in between. However, if you have a lot of specialized knowledge, the kind of superpowered brain there, everything has potential. It doesn't mean every single house is a deal, but everything has a potential. I can take almost any house out there or any situation, and unless they're completely unrealistic and want $1 million for a shack, I can make it work. How I do that? Well, I can do wholesale to get it cheap, or I can do a lease option to give them full price. If they don't want either of those, I can refer them over to my realtor and get a marketing fee or a referral fee, or I've now earned their favor, and next time they get a deal that they know that works for me, they'll kick it over to me. I can buy it and hold it. If it seems like it's something I want to keep in my own portfolio for good tax purposes, I can fix and flip it. I can do a joint venture. I know some different investors. I say, hey, this isn't something I don't want to do rehabs anymore, but I got this great deal. Instead of just wholesaling to you, why don't we joint venture on this? You bring in, you go in and do the rehab. I provide the deal, and we both turn a profit in the end. I can do a wholesale lease option. I can do the lease option and then turn around and wholesale it to another investor. And in the end, I can help more people. Okay. If I only know kind of one thing, hey, quick cash for your house, then I can only help people that have the equity. Well, most people don't have 30, 40% equity. Most people, especially nowadays, are moving around more often. They have a lot less equity. So I can help more people. The more knowledge I have, the more I can help them in their problems. And therefore, the more deals I get. Plus, I just like helping people in general. So that's kind of my drive to do a lot of this. But I also like, having money and being able to provide financial security to my family. So what's the bottom line? What's my main point I'm trying to get at here? Some of the key points are gain a specialized knowledge in what area you want to focus on. Focus on one, learn it, and then get another one under your belt. The more you know, the more helpful you are. Again, going back to that foreman analogy, the foreman earns more than the average construction worker because he knows a lot of knowledge and a lot of times from a lot of experience of how to run a construction crew. Focus on the areas that people are not. If the market is flooded with, wholesalers or rehabbers, well, that means there's a lot of them out there. Supply versus demand, right? If there's a TV show about it, then there's a lot of demand. A lot of people are out there selling, wholesaling, and rehabbing, and those are great strategies. Like I do not knock them at all. In fact, I work a lot with wholesalers and rehabbers, showing them how like my lease options can make them a lot more money. I stand out in the marketplace because I'm not a one-trick pony. I know how to do all these different strategies, and so people bring deals to me because, and not just investors. Like I have realtors, I have property managers that bring me deals because they know, hey, I can help that person, and people are people. They want to help others. So I stand out as someone who knows a lot of different strategies, but I kind of have my bread and butter are lease options and wholesale and model what works. So, if this works, I modeled it after someone else that works. It's not like I just learned this overnight. Like I modeled after some of my mentors that showed me exactly how to do this. I modeled what works. And then once I learned it, I applied some of my own flavor to it and made it mine. And learn how to truly work smarter. Don't go out there and just do more of the same thing, but learn, hey, how can I do this better? How can I do it smarter? But after you have modeled what works, it was put in that order for a reason. First, learn it, and then learn how to make it better after you've learned how to do it. The more tools you have in your toolbox, the more valuable you are. If you only know how to do wholesale, that's all you can really do. And always, and this is one big kind of value tool for you here, always have info on 3 offers available. When you go to meet any sort of seller or client, whatever, first have, your fast cash or wholesale. That's your offer, but that's the same one as everyone else, but it's one you have, right? And you have information on it. Then you have full price with terms. You have your lease option. So with that, you're able to explain how you're able to give it to them, and then or a referral, whether it's to a realtor, a property manager, or another investor. But if you have information available when you go to meet a seller, especially a motivated seller or even an unmotivated seller, you have information on this, and they're going to remember this. So let's say you get someone who isn't motivated, like I'm just thinking about selling, like I'm not really in a rush. Well, you can say, hey, you know what? If you're ever interested, let me connect you with my realtor, Cindy, over here. She's great. She's awesome. She'll connect you. She knows the area, da 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 da. And you talk her up. Or you say, hey, I know an investor who focuses on X or whatever. And you don't necessarily have to say, I know an investor. You say, like, I have partners. I have people that I know that I can connect you with no matter what you're trying to do. But you focus on what their problem is. So don't go in there if they're like, hey, I need out in like 2 weeks. Don't say, oh, I'll give you a good realtor. No, that's not going to help. But you have information available on it, and you can provide that, via email. You can have some brochures, whatever. In fact, today I just collected brochures from a really great property manager. Hey, if someone I'm talking to, they just want to rent it, they have don't want to do lease options, don't want to sell it, I can give that brochure to my property manager. And guess what? I helped him out. What do you think he's going to do? Yeah, he's going to turn around. He's going to help me out when he has someone that is looking to sell. Hey, this guy's had this investment property for 6 years, and he's looking to sell. Is he going to kick that over to a realtor? No, he's going to kick it over to the guy that's bringing in business, right? So that's my key point is there, like, work with others and have information available. Try to get, some very simple brochures, or collect the brochures from others. Get some brochures from your realtors. If you know a wholesaler, get some brochures from a wholesaler, explaining the benefits. And then with me, I have my lease option ones, but I'm able to provide all of that to them. So you always want to have those. That's a really key point to take away there. All right, so for more information, click on the link below, and I'm more than happy to provide any additional information to you, answer any of your questions. So hopefully this helped you out and gave you a really good understanding of kind of how gaining specialized knowledge and understanding the different strategies and working them together can really help you. So take care and God bless.